Hello guys, welcome to Cafe at Simplify. Yeah, this is second semester and I'm wishing you the best. Let's dive in into guess what? We are diving in into one of the new subjects and course units, and that is Introduction to Finance for Economists. Yeah, and the question we are going to share is explain 5 roles of capital markets in the Ugandan economy. It came in the past paper, end of term, and it had 10 marks. Explain 5 roles of capital markets in Ugandan economy. We have to know what capital markets, first of all. See that capital markets are financial markets where businesses, governments, and individuals buy and sell long-term financial securities such as stocks, bonds, and other investment instruments to raise capital for growth and development. So capital markets, financial markets, where businesses, governments, even you as an individual, you buy or sell long-term financial securities such as stocks, bonds, and other investments to raise capital for growth and development. These markets help in efficient allocation of financial resources and facilitate economic expansion. Uh, so we have two major capital markets, and that is the primary market and the secondary market. What are primary markets? We see that primary markets is where securities are issued and sold for the first time. For example, a company issuing shares through an initial public offering to raise funds. Okay, my friend here has something that primary is the initial buyer. So, secondary market, where investors trade previously issued securities among themselves, buying and selling shares on the Ugandan Securities Exchange used in full. So, come and if you're answering the question, you don't necessarily need to put this, but I was giving you the background. And so, 5 roles of capital markets in Uganda. We have mobilization of long-term capital, encouraging investments and savings, enhancing economic growth and development, providing liquidity and marketability, and lastly, promoting corporate governance and transparency. Mobilizing Mobilization of long-term capital. Capital markets provide businesses and governments with access to long-term financing through instruments such as stocks and bonds. This helps in funding large infrastructure projects, industrial development, and expansion of businesses. 2. Encouraging investment and savings. By offering diverse investment opportunities, capital markets encourage individuals and institutions to save and invest their money in financial assets rather than keeping it idle. Investors can earn returns through dividends, interests, and capital appreciation. 3. Enhancing economic growth and development. Efficient capital markets ensure that financial resources are allocated to productive sectors such as agriculture, manufacturing, and other services. This leads to job creation, industrialization, and overall economic development in Uganda. That is, enhancing economic growth and development. 4. Providing liquidity and marketability. Capital markets create a platform where investors can buy and sell financial securities easily, ensuring liquidity. Liquidity is the ease with which money changes hands. Investors can convert their assets into cash easily without significant losses, promoting corporate governance and transparency. Companies listed on the Ugandan Securities Exchange, or what we call use, are required to follow strict financial reporting and governance standards. They have a board, which we call use. This promotes transparency, accountability, and investor confidence in the financial markets. Yeah, here I copied and tweeted because I wanted it to come at the end. Capital markets are financial markets where business governments, where capital markets are financial markets where businesses, governments, and you as an individual buy and sell long-term financial securities such as stocks, bonds, and other investments. Raise capital. You have to put it the reason. Raise capital for growth and development. Yeah, and that is it. This is Cafe at Simplify. Share, like, subscribe, and let's meet again.